just give it a minute. So for this to go live, there's a little delay, and we can tweet about it. I'll be checking on my phone anyway if we're definitely live.
Okay.
And what way it's all showing and stuff. So verse. I don't know what way I slept. My lower back is absolutely killing me. And the way I'm sitting. What way it's all showing. Oh, there we go. We're definitely live.
Okay.
So I'm just going to leave that open, and I'm gonna make sure I am giving everybody. Yeah, YouTube changed the way it looks. A lot of people were saying this, that they couldn't find content from other people, and they were like,
same thing. Same thing. You used to be able to click videos, and then all your content would be in order from the last one, working itself backwards. Now you can find it. Nobody's. You have to sometimes click on the home page, and then you'll find it. But they did something screwy there. I can't hear you.
Can you not? I'm not talking.
Okay. Oh, okay. Good.
I'm just typing.
It went real silent. Real silent for a second.
Okay. I'm just focusing on.
Are we live?
Say in the tweet. We're live. Yeah, we're live. We have a few people.
All right, perfect.
With few people already joined us.
I'm going to make you co-host. Did you post on Twitter that we're live?
Just posting it now. That's why
good. I'm going to go
silent, because I was thinking what to say.
I'm going to go on right now and retweet that so that my followers can come go there as well. We'll look for you.
Thanks. Hello, guys. Everybody in the chat. I see you. Welcome. I will be keeping an eye on my phone as well to see the chat. You can, of course, guys, take part by commenting and giving us feedback or asking questions. Let me just get this pushed on Twitter. And I have you tagged, BC, if you want to.
Okay, perfect. Yep, here it is. I got it. Quote, retweet. Come join us.
I can't wait to see what you have prepared for us.
Join us live. Okay.
Because if it was a crazy week, or what, huh?
Yeah, what a crazy week from our last show. What a difference. Oh, everything just blew up.
Absolutely.
Blew up. And you know what we'll do? Let's look at XRP. Remember we had that.
Yes, we definitely have
trade.
Yeah.
And we had that, just remembered about that. We had that trade that if Bitcoin dropped, some of the levels we're looking at. So let's see if those levels hit. We'll be able to check. It'll be really good. I haven't checked. I just remembered. So we'll see.
So I'm seeing feedback now that you were right. But we're definitely going to go back to that analysis on XRP Live, just to go over everything.
Okay, 100%. Good. Yeah, because I haven't seen it either. So I'm curious to see if my analysis was right or if it was wrong.
Guys, if you see my tweet, please share,
retweet it.
Retweet
please,
it.
Guys, please.
Let it go. Let it go as far as possible. Just get people come and join us. This is going to be an exciting stream.
You know what? I've got people.
Let us know as well that you can hear and see us fine.
Copy link to tweet. Here we go. Let me put it on my Discord so that people can join as well. Everyone.
We can see your screen.
I am live on YouTube. Oh.
Thanks for everybody joining and commenting. I am just sharing across everywhere as well, just because I think it would be worth having you.
All right, we're there. Now I'm going to share my screen. Is my screen?
Yes, you can see Bitcoin.
Okay, perfect. All right, awesome. We'll look at that. You let me know when you want me to start, and we'll get the show rolling.
Look, I think the stage is yours, BC.
Okay. Well, hello, everybody, and welcome again. Thank you, Marta, for having me back on your show. This has been a really cool series that we've been doing every other week. We've been diving into the charts, giving you guys some good context, some good alpha, talking about different subjects, taking on requests. And this past week, as you guys all know, crypto just blew up. It was an incredible roller coaster. We were starting our midterm rally and everything was going really good. And all of a sudden is like the rug just got pulled out from under us. So a lot of things happen. And one of the things that I just want to start off by saying is I've been talking about my target pretty much the entire year. And I've been talking about my 0.886 target. And I told you guys many times before, I don't know what was going to cause us to drop, but there's always a reason to drop. It's always an unfortunate reason. And back in 2018, to give an example, we had Tether FUD. We had exchanges getting raided, Korean exchanges getting raided on a daily basis. We had China banning Bitcoin. We had China banning miners. We had everything thrown at us to drop us into that capitulation. There's always a reason for it. So when I was talking about hitting my target, many people were saying, well, the 3AC and Celsius debacle, that's all the Bitcoin that was going to get sold. That was it. There's nobody left to sell. And I was telling you guys, hey, listen, I'm not smart enough to know what's going to cause it, but there's always a reason. So I think that when this happened with FTX, this unfortunate event happened, it can now sink in that the market is designed to repeat its cycles. And don't just take my word for it. And this is what this video is going to be about. I don't want you to just listen to one person telling you, because at the end of the day, there's a 50-50 chance that somebody's right. But it's a lot more credible if that person can show you the facts, can go all the way back to the beginning, and then show you a historical cycle that happens on every bear market. And the unfortunate part is that humans, we suffer from very short-term memory. We let the dopamine of the bull run cloud our judgment, and when we get into a bear season, no one likes to accept it. And I think that no one likes to accept it because they were so euphoric during a bull season, they didn't take profit, and they're underwater. And our natural instinct is to fight or flight, and we want to fight against the trend because we want everything to go back up in a hurry so that we can get out of the underwater bags. And that's completely reasonable, but it's not a practical way of looking or approaching the market. So without further ado, let me go back. I used a chart here with no notes. So I use a Bitstamp because Bitstamp has the most data available to us. So what I want to do, guys, I want to go back to the very beginning. And here's the thing that I'm going to say. I'm going to tell you guys right off the bat. And this is something that I get comments on, get commented on my analysis. It's different this time. There was X amount of people back then. And yes, you are right. As crypto came out and as crypto progressed, things shift in the market as far as popularity. But one thing that did not shift is the market cycles. And that's what I'm going to show you today on this video.
Just before you go on, I just wanted to make that point because when we were doing that analysis a week ago or a couple of weeks ago, when we were discussing your reasons behind the TA and the price action, I know many people that were watching us, they were probably thinking, you know what, like you're saying, probably this time is different because people don't like to hear bad news. They don't like to hear the negative things that, you know, in general, they don't like to hear what they don't want to hear. And obviously,
absolutely,
you know, when you're in this situation where you're seeing prices have been dropping for so long, you're looking at someone come to you and try and give you a cold, factual analysis. You're still letting the emotions get to you, and you're still thinking on the basis, you know what? Yeah, I get why he's saying that, but deep down, I kind of feel like it is going to be different. But it's really, really interesting to see how everything later on plays out. And like when you were doing the analysis and you were talking about the fibs, and I remember thinking that sounds low, but at the same time,
Yes,
here we
of
are,
course,
right?
of course.
Here we
Yes.
are. And like there was obviously no way to predict what was going to cause the drop. But yes, this is it. This is where we are. So I'm gonna let you continue.
Okay, great. So here is, we're going to look back at the run that we had here in 2013 in that retracement. So I'm going to go ahead and put my fibs on this move. So we had a high, we had a low in here. We had a nice run up to the top. And if you can see here, a nice little run. As a matter of fact, let me take the extensions off of my fib. Give me 1 second, guys. Let me take this off. We don't need the extension style. This is for other more in-depth analysis that I like to do, but for this purpose, we don't need that. So we had a nice flat line. We had a nice run. We had a retracement. Now I want you to see where that retracement hit, right there at 886. Now, before I continue, I want to be clear about something. 0.886 is not an actual technical Fibonacci level. The actual Fibonacci levels are 236, 382, 618, 786. Are the actual fibs. Now, the ones that I've entered into my fib tool are 0.50, 706, and 886. Let me just start real quick. 0.50, if you can look it up, if you look it up on Investopedia, this is known as the Wall Street fib, or also the Wyckoff check, the 50% or the Gans 50% rule. You can look into that yourself when you have some time, please. 706, there was a really there is a wonderful trader that mentored me and I learned a lot from, called Chingus X, and he turned me on to this level, and I've been using this for about 3 years, and it's super accurate. I really love it. If you guys want to try it out and test it out, 0.706. Give it a try and back test it. And now 886.
Maybe after the stream, we can share the settings somewhere.
Sure. Exactly.
Yeah.
As a matter of fact, guys, if you want to take a screenshot of your computer right now, here are my fib settings. So if you guys want to copy them and then try them out, see what works for you. Remember, guys, there is no wrong fib. When we add a fib into our sequence, we want to find something that works. If you can find something that works, please let me know. I don't know it all, but I just like to use whatever is going to allow me to make a better decision in how I trade. So 886 is known as an institutional level. 886 basically represents an institution is going to buy at 88 cents. 88% discount. They don't want retail price. They don't want wholesale price. They want bottom dollar. Bottom dollar, dirt cheap, exactly, 886. So 886 is a level that you're going to see as I do this analysis that happens to hit more often than not. So obviously, I'm going to continue to use a level that I see and back tested that is working. So on this run up in 2013, 886 was respected. Then we put in a bottom right here. Let me move over here. I'm gonna leave that fib there. So the bottom of this run here is basically the low is $45 is that low there. So moving up. Okay, moving up here, we had a nice little retracement. We had a little move. We came back down here. We put in a little bit of a higher low, a higher high, excuse me, from this low here. And it doesn't seem like that on the chart, but you can see where this low here, we dipped down. We had a nice little run up. We had a nice little drop here. This low, the new low, now became 63 bucks. And then we had another beautiful run in 2014 in this run right here. So what I'm going to do is I'm going to take the fib from the top of that market, and I'm going to use this one right here, guys. We had a nice little run to the top. We could use this. Actually, you know what? This is the actual low. So let's use the actual low, which is $45, which is the 0.886 from here. Now, when we look at the price action, we can see here that we had a really nice top at 1163. You know what? Let me move this over here. I've got, let me take my magnet off. Give me 1 second, guys. This one I don't have to
Yeah, the
overlap.
magnet is helpful, but I hate using
Yes.
it.
Oh, here we go.
Can
So
be
I'm going to put there it is, $45. And what I'm going to do here, just so I can get the exact coordinates, I'm just going to manually punch in $45 so that we have the accurate reading. Okay. So we had a really nice run. And then look at the low from the top. If you follow the price action all the way down, she put the low right here at 886. On this particular example, we went just a couple of dollars above. On this example, we went a couple of dollars below. When I say 886, guys, I don't mean to the penny. This here,
it's very hard to catch the penny. Exactly.
Yeah, and technically,
and don't
from
try
here
to
here, yeah, technically from here to here is 886. Between 886 and 786, anywhere in this vicinity is 886. I just happen to like playing the actual, you know, a little bit closer to the line because, again, you will see from my study that 886 is an area that gets respected. So here it is 2 times in a row. We got 2013 run. We have a 2014 run, and now we have another beautiful run. Now this low here, guys, just so that we're clear on that, the low here is 152.40. So now we fast forward. We had a nice, you know, long bear cycle. Look at this, 1 year of a bear market, and then we came out of that of a low of 152.40, and we come into the most famous bull run of all time, the 2017. I think this is the bull run that introduced most people to crypto, so I think it's the most memorable one that people really pay attention to. But one of the things that I do, here we go, there we go. Let me just push this down. We kind of lost our other fizz. That's okay. We're just going to go ahead and apply, snap it here. We're going to come down into, all right in here. Give me 1 second, guys. Sorry about that. Just let me squeeze this in here. Okay, you know what? I apologize, guys. There was another small little run that was actually something similar to 2019, which is this little run right in here, this little run. So if you look at how you put a fib, you usually take it from the swing low. Now we had a low here, but as you can see, we had a nice little run up into here, and we put in this low right here. So I used to put the low in here, and I've had people that are smarter than me tell me that the actual low should be put in here in 2016. So this is where my I'm going to put it to the penny. So the low is 465.28. So let me go ahead, and it makes sense. And again, it's a little bit what did I say?
465, I think.
465, yeah, 465.28. There we go, 465.28. Now let me go ahead and there we go, down in here. Now look at where we fall once again. Nice little move to the upside on, let me put this right here, right on it. Look at this, guys. Look again, right down here at 886. Now, when you're looking at fibs, guys, and you want to make sure you put your fib correctly, one of the things I like to do is go to the upside and kind of see if the other fib lines got respected. And if you can see here on this move down, look at the way 382 got respected. On the next move to the actual fib of 618, look at the way 618 perfectly was respected as support and resistance. Look at the way 706 was, again, that Chingus level one that I told you about, 706. Look how beautiful it held the price action, that 706. And again, 706 is not part of the actual Fibonacci sequence, but now you can start seeing why I like using that level. And I call it the Chingus level just to give the guy credit who turned me on to it. I always like giving credit where credit is due. So you can see again here, look at 886. Look at where we came. And most importantly, guys, I want you to look at this blue line. You see what this you see this blue line? You know what this represents, guys? This represents the 300 EMA. Now, a very popular EMA that I hadn't used prior to this year is a 200 EMA. And to be honest with you, I hadn't used a 200 EMA up until like May of this year, where everyone was talking about the 200 EMA, that we've never gone below it. And I was confident that we're going to go to 886 and we were going to break it. So I started using it to help people kind of get a visualization. But I used to always use the 300 EMA because I think the 300 EMA was a little bit more accurate. And you can see that yourselves. In 2017, 300 EMA and a 200 EMA both caught the price action beautifully. But when we go to the 2019 run, we actually got closer to the 300 EMA and we broke through the 200 MA. Now, this is our next run that I want to measure. Again, we've seen how close 886 has been a level of support on that drop. Now we have the low back here of 2018. We have the high of 2019. And look at that. Again, right at 886. You cannot,
Amazing.
If you're an analyst, you can't look at these levels and say, oh, no, I don't want to use that. I don't want to use that now. I'll admit that it worked back then, but this time it's different.
Yeah.
You can't do that. As an analyst, we cannot allow our bias to enter into our analysis. We have to do it. It has to be factual. We have to be able to back it up.
This is the risk management. That's part of your risk management.
Absolutely. That's a really good point, because if you ignore the facts and you allow your bias to take over, you're going to get burned really bad, and it's irresponsible. You won't have any true risk management if not using the facts. So I've showed you from 2013, every single run that we've had, it's been 886 for the bottom. On this one here, which was the COVID crash, it went a little bit below it. But again, I'm not trying to catch it to the penny.
Exactly.
I'm trying to catch it. Confluence. Yeah, exactly. Confluence. Now, I'm going to give you more than two areas of confluence to back up 886 on this cycle, just so that people can say, oh, all you're relying is on the fib. No, I'm not. I'm using the fib because it's the most, I think for me, it's the most accurate, and it's the most well used, and people are very familiar with it. But I'm going to give you different confluences that'll get us to that 886 target. Now, we're going to go into our current situation where we're at now. So we're going to put the top here at 69,000, and our low is going to be 3850. So let me go ahead and just make sure that we have everything correctly here. 69,000, and it's
what low you're putting in from 2000 and
the COVID low here on COVID low, which was which basically what kicked off the bull market to the high of 69,000. Now we are here. Now, there's another way that I like to measure the market, and it's based on a theory called harmonic patterns. I'm sure some of you have heard that terminology. Some may use it, some may not use harmonic patterns. Harmonic pattern is when you guys get a chance, look it up on Google, and it's just a way of the way the universe and the way things are even done in nature. Harmonic patterns are really interesting. It's a good read, but it's very useful. It's been very useful for me in my analysis when I look at markets. Now, harmonic pattern, basically, another way you may hear it is AB equals CD. So basically means the point A to B will usually repeat for C and D.
Is
now,
this the same as Elliott waves? Or Elliott wave?
I don't know, because I'm not familiar with Elliott wave theory. I mean, I'm pretty fascinated on some of the stuff that people have posted on Elliott waves. But I'm not educated enough to answer that correctly. I don't use Elliott waves, and I don't use Bollinger Bands. I understand the theory behind Bollinger Bands, and I can understand that a little bit better. But those are some of the things that I haven't used. I've touched a little bit into the Ichimoku cloud. But again, I think it's important as an analyst, well, for me anyhow, is find a set of tools that work that you could analyze the market and that are proven to work and stick to those. I don't jump around to too many.
Yes.
My analysis are usually pretty much the same tools
if
that I
it
like to
works
use
for you and makes sense and you can explain why this is the reasoning behind it for me, there's no need to be adding more, you know, and basically complicating it. And I just want to get in here, guys. If you have any questions or if you have any comments, please feel free now to just go ahead and write them into the chat, because it would make a great conversation between all of us here as well. Sorry.
Exactly. No. Please do. And you are right. I want to make sure people understand what I am saying so that we can help them. We're here to help people. We're taking the time. Nobody's paying us for this, guys. We're here taking our own time to help you guys because of the love that we have for this field. We love to trade and we love crypto. So we are excited about it and we want to share that with you guys. And if you want to believe in 886 in those targets, great. If you don't want to believe it, that's fine. You don't have to. We're just trying to help you with your risk management and have a little bit broader look at the different possibilities based on, again, past performance. So going back to this harmonic pattern, you basically take the top of the market and you take this low here bounce. And yes, exactly. And then you clone it. You take this here, you clone this, and
you're doing that on the weekly, or would that apply
on the weekly? Okay. Yes, on the weekly here. And then you take your lower high here. And so this is AB equals to CD. Now look at this, guys. Look at where it ends up here.
So look at where it ends up. Comment here from Rocket Marty, who said it's going to be 12K, and what is landing at for you there? The
harmonic pattern lands at 12,361 and 886 is $11,277 on the Bitstamp So here are two tools completely separate of each other that are showing confluence on that same area. Now I'm not done yet. I sound like an infomercial, but wait, there's more. So there is another tool. Many of you guys have seen the volume profile, the VRVP profile. The VRVP profile basically is a study showing you where most of the interest is found on a particular asset, and these levels are going to change depending on what data you introduce into the chart. So for this study, we're going to use just this bull run, which means that I'm going to just scoot this over just a little bit, and I'm going to leave the COVID crash, which is our low, on the chart right there. And this will then give us all the information from the COVID crash, which was our low, to the very top of the market to the present day. Now, look at this here, guys. Look at the shelf. This is the POC level. So this here is a POC level stands for point of control. This line basically represents where the most orders, the most demand for Bitcoin was in this entire cycle is right here. Look at the way that cuts right exactly on 886. This volume shelf shows that this is the beginning of the demand. And that also lines up with $12,000. Do you see all this confluence, guys? You've got the fib. You got the harmonic patterns, you got the POC level, you got the volume profile shelf. It just goes on and on and on. At this point, if you don't want to believe, I think you're not being fair to yourself, and you're allowing your bias to really interfere with the analysis of what we're trying to show you. And again, we're not trying to create FUD, create fear, because FUD is basically fear and uncertainty, but usually it's done through fake news or things that are not true or just straight out lies. This is different, guys. This is trying to help you understand where you can put buy orders. We're trying to change your mindset that when you see the market going down, don't be fearful. It's the opposite. You should be able to rejoice, be excited, be ready, be prepared so that you can take advantage of the opportunities. Many of us come into this space for one reason. greed, because we hear the stories how somebody took $1,000 and turned it into $1 million, and everybody floods in here wanting to do the exact same thing. Well, you know what, guys? You're not going to turn $1,000 into $1 million buying the top. That's not going to happen. It's going to happen at these levels. Well, it's going to happen when you find assets that have the potential to do 1,000, 10,000% and you're buying the lows of those assets. Of course, with Bitcoin, you're not going to put $1,000 in Bitcoin here and turn into $1 million. I mean, you could, but it's not likely. But this type of analysis applies to any asset, and there are many assets out there that have that potential. When you look at the market and you remove your bias and you use these types of tools that we're trying to teach you.
Just got a comment. I don't think VC is going to have an issue with this. Personally, myself, I don't. And I actually think you like trading Ethereum. So we might have a look at Ethereum in a minute as well and
absolutely.
do a similar thing. Just before we do, what I wanted just to kind of maybe notice here, with the 886, with that point, if you're taking this into consideration and you think this is your point of confluence, which I think after watching Bleeding Crypto explain this way, if you allow yourself maybe about between 3 to 5% of an error from that point, and maybe plan your DCA orders in that gap from the 886, 3%, 5% above to below, I think, the risk to reward ratio at that level is going to be outstanding. It's going to definitely work in the favor of buying in now and thinking, you know what, we've seen the worst. Look, this looks like a good bottom to me, and without using reason, without using data, without using all the technical analysis. So that's what we were saying. It's not that we're trying to create fodder or exactly like just scare you here that crypto is going to lower prices. You should be. It's the opposite. It's where you make smart decisions and where your risk management is going to work in your favor and actually bring you amazing returns. No point.
Absolutely, and I'm so glad you brought that point, because I completely left my mind, and there's a point that I wanted to make. As much as I believe in 886, as much as I showed you the proof of 886, am I buying at 886? I'm not only going to buy at 886, but I'm going to do exactly what Marta said. I like to find confluence. When I look at a level where I want to start buying, I want to buy. I want to make sure that I am giving myself the opportunity. I don't want to pass, and I don't want to chase candles. So I want to give myself the opportunity. And you know what? Where I'm going to start buying, guys, I'll show you. And it's not at 886. It's actually a little bit higher than that. And I'll show you why. In 2019, we had a really nice run right in here. So this here, I'm going to paint this in green. Actually, I'm going to put in gold. Gold represents on my charts where my buy-ins. I like this level. And when I zoom into this level, guys, watch this. Look how neat this level is.
Beautiful.
Look at this. Look at the way it crosses through 2017 right here. Actually, I'm going to lower it just a tad bit. Give me 1 second. My computer is not. Oh, boy.
You have the magnet on.
Oh, that's why. Yeah. There we go. Okay, right there. So look at the way there we go. So I like the way we had a nice little support shelf here, resistance, a nice resistance area here. And we fast forward into 2020, we had again a nice resistance support area. This is where I feel the most comfortable buying, start really accumulating here. Have I bought Bitcoin now? I actually have bought Bitcoin right now because I've been playing. I bought it for me and my group, I bought it for a move to the upside, because I think we're going to have a short squeeze based on some of the data that I've been researching with my group, with my Discord group. So I believe that we're going to push up. But here's the thing. Like I told them, if I get it wrong and we don't get a short squeeze and we're not going to go up, $16,100 is going to be my buy-in for Bitcoin, because that's where I bought it. And I don't want to put a stop loss. because I believe in Bitcoin and I believe that Bitcoin is going to go way above the all-time high. So that small amount that I bought becomes my beginning. My average.
I'm sure you didn't put in like 50% of your holdings.
No. It was one Bitcoin, and it's not that big of a deal. And when you compare to the amount that I plan to purchase when we start going to these lower numbers, it really gets drowned out. It becomes a much cheaper purchase than what I actually purchased. And that's the beauty of dollar cost averaging. Yes, so for me, guys, if you look at this $14,000 level, this level to me is a bargain. It is a bargain. And of course, 886 to me is going to be a level where I have the most interest. But here's the thing, that I am not going to stop there, because we don't know if 886 is the bottom. And I never said that 886 was the bottom. 886 to me represents the most interest. It doesn't mean it represents the bottom. We have to also look at the point of control. Not the point of control, but this area here. If I bring in remember I told you when you move the data into the screen, the point of control changes?
Yes.
I want you to see this, guys. If you incorporate the 2017 run, the 2019, and today's data, look at where the point of control is, guys. The point of control. Let me move it just a little bit here from the actual low right there. Look at where the point of control become. Let me move this. I can't see out on my screen. There we go. Point of control is right at that $8,000 level. And it's funny because a lot of people in Twitter have been mentioning they have bids at 8,000. I could see a case for it. I can see that the point of control for this entire move is at $8,000. And I think between $8,000 and $10,000, maybe a level where we may come back down and some orders may pick up. I'm a big believer, guys, in stink bids. I think I've told you that before, Marta. I've seen so many wacky things happen in this space. You wake up and you see a massive wick to the downside that got bought up immediately. And I want to be able to maximize my ROI and my daily cost average by when I go to bed, instead of sitting in cash positions, I like leaving stink bids that I think that may never come. But if they do, I'm going to wake up one very happy person. So those are the levels that I'm looking at, guys. 14,000, 11,000, 277, 10,000, and 8,000. And if I can get those areas there filled, you guys know, hopefully you know, that all of the purchases above that become cheaper. You automatically lowers those entry levels. So don't limit yourself to one number. Don't try to catch the bottom, because there isn't an analyst, there isn't a professional trader that has any type of reputation that will tell you that he can guess the bottom. No one can guess the bottom. And the bottom is really going to be something that's going to surprise us all. It really is. I think when we look back in hindsight, when we're in 2024, 2025, and we look back at the market, we're going to be like, oh, wow, I didn't think we would go that high or that low, but it's going to be something that we're not expecting. So just keep that in mind.
With the bottom, the thing is, you can, well, not even predict, but assume it to some extent. And that's when you start to risk your risk management and where it makes most sense for you to buy. Whereas when it turns, it can honestly go up indefinitely. So this is where, you come in with the technical analysis and your best buy level, where, when you assume we are most likely we're going to go above the last all-time high, as, this is just the nature of the cycle again. So I can also understand why some people would want to start buying now. They're assuming, look, we're low enough anyway. If I lose from here, it's not going to be the end of the world. But also, again, it depends what their way of breaking down the portfolio and their buys is as well. And so everybody is different. But 100%, I just think it's impossible, guys, to say, oh, well, no, I do understand as well. Right now, everybody feels we are going to zero. There's just the end of the crypto, because how could this have happened? Such a massive exchange just went bust. Crypto is going to get such a bad name. I think, this whatever has happened, let's not just go into the detail of it. I don't believe for a second it is going to be the end of the crypto. I believe actually
absolutely not.
100% crypto is going to take a massive turn, and we're so lucky to be in it. I think we're going to have a look at Ethereum, guys. If you have more questions, keep putting them into the chat. We'd be very happy to answer them for you. But I'm very fascinated to see where we could be looking at some. Yes. I call it cheeky bids. Myself and a lot of people that that probably know me, they come from CoinsKids Discord, CoinsKids crew, and we call it cheeky bids. So definitely, let's see where Ethereum. What do you think? Because a lot of people say Ethereum is going to flip Bitcoin. Do you think this is ever going to happen?
For me, honestly, 100%.
Really?
I really do believe it is.
So you're an Ethereum maxi.
No, actually I'm not. I'm a money maxi. I'm not a Bitcoin maxi. I'm not an Ethereum maxi. I'm a cash maxi. People hate cash. I love cash. I'm old. Cash is king. And I don't think in my lifetime that's ever going to change. So anybody out there who's listening who don't like cash, send it to me, please. I'll be more than happy to take it off your hands. So that's why I tell all the Bitcoin maxis. So I'm not in this for the tech. And if you're in it for the tech, if you're in it to save the world, to clean air, all that stuff, go ahead.
We can curse here. Great. It's fine.
we can. Okay. All that bullshit. Then you can go ahead and believe it. I'm here for one thing and one thing only. I want to get paid. And that's the only thing that matters to me. Nothing else in this space matters but to line my pockets. And everybody, most of the people who know me, they know how I feel, and some agree with me, some disagree with me, and that's okay. Everybody has the right to their opinion. Now, for me, I think that Ethereum, looking at the way it has cemented itself in this space, and the way it's the cornerstone of the majority of the projects that come into the space, even layer one protocols have to come in through Ethereum, and then they break off and have their own mainnet. Ethereum is the gateway into crypto, and with that type of popularity, and now that we have the MartaVerse, and now that we have the NFTs, I really do believe that we're going to see Ethereum flip Bitcoin, especially now. Bitcoin has fallen 11% below the June's low, while Ethereum holds 31% above June's lows. That's massive. We have always been accustomed to seeing Bitcoin drop and everything else, including Ethereum, tank. Everything. This time, it's been very different. Ever since the merge has happened, the strength of Ethereum is being shown on the charts, and you've got to respect that. And you've got to look at the macro picture and look at what Vitalik has done and what the foundation has done and how strong Ethereum is. And for that reason, I do believe that we're going to have a flippening on the next cycle. And for you guys who've heard that terminology and don't exactly know what it means that Ethereum's market cap is going to flip that of Bitcoin's. And if you ever have a chance, guys, look, you can back test this yourself. From the very beginning of Ethereum has always outperformed Bitcoin in every bull run that since it's been around. It's always outperformed it by a lot. Now we have it the second biggest market cap, and it's been the strongest against Bitcoin. So it's just one of the things to keep in mind. You don't have to believe it, guys. And I don't want you to believe it. All I want you to do is seize the opportunity that we are trying to bring to you. If it's Ethereum, if it's Solana, if it's XRP, if it's Doge, I don't care. I'm not a maxi of any of these shitcoins. They're all the same to me. They are a vehicle for me to line my pockets. And that's all I really care about. So if we use the same strategy, so let's move on to Ethereum. If we move the same strategy that we used on Bitcoin, again, my same tools that I like to use,
yes.
And we have the fib at the top of the market back in 2018 at 14.20, and then we have the low here. We have the low at $2.23, and you can see where we stood on that low, that $2 low, for quite some time until she actually started. Give me 1 second, Marta. I'm working on a short here, and I just got my alerts coming out.
Oh, no worries.
Give me 1 second. I want to make sure. Okay, good. Was like, okay, so it stood here for quite a bit, and then we had a nice little push to the upside, and you can see that move to all-time high. Now here's 886. I want you to notice something, guys. Even though it broke it, look at the way we came right to 886 and bounced. You guys cannot ignore something as beautiful as this. And I don't know if you guys get excited about TA the way I do. I know Marta does. Me and Marta talk about it. We get so excited about the stupid. We're total nerds when it comes to TA. And that's okay.
That's the reason why I'm doing this.
Isn't it amazing to see the way it just bounces off 886? Now, look, it bounced again. It did a back test. And look what happened after a back test. It broke through. And that's something very typical. Normally, we want to see a back test. Why? We want to see how strong that support is. And you can see here it failed and here it dropped. Now, again, going back to what I was saying before, Bitcoin has always been the stronger asset. As far as when it goes down, it doesn't go down as much as altcoins. And Ethereum, at the end of the day, is a shitcoin. It's an altcoin. We call shitcoin anything that's not Bitcoin. Just for you guys, so you guys could understand when I say shitcoin. Anything outside of Bitcoin, and that goes to prove to you that I'm not an Ethereum maxi. I'll call Ethereum all day long a shitcoin because that's really what it is. However, it's a shitcoin. It's going to make me a lot of money, and it's going to make you a lot of money if you don't have a bias. Look at the retracement, 94% retracement on that. Even when Bitcoin in 2019 went to 14,000, Ethereum could only make it to $360, and yet when we had that COVID crash, look how much it dropped, guys. Almost 80%. So as an analyst, guys, as much as I believe in Ethereum, as much as I believe that Ethereum is going to flip Bitcoin, I cannot allow that bias to enter into my analysis. So I am going to use the same metrics that were used here. So I'm going to go ahead and put my high here of this run, the low of the COVID right in there. And as you can see, we got really close to 886. But in my opinion, because again, I'm not going to allow my bias to come down, I'm looking for a 90% retracement, similar to what we had here in 2018. Let's just say 94%, just so we can compare apples to apples. Okay, right there would be comparing. And now what I'm going to do is, do I find confluence? Because again, even though this is showing us a much stronger price action than we have ever seen, I cannot use that as part of my analysis, because that would be introducing my bias. So can I find confluence? Now let's do the same thing we did before, guys. Let's do a harmonic pattern. Let's look at the volume profile, and then just look at some standard support and resistance. So here's our harmonic pattern on Ethereum. Let's clone that. So we got here, we cloned it. We come down here, we come down here. Damn. Look at that, guys. It completed the harmonic pattern. So when I'm doing the analysis here on Ethereum, guys, and again, not putting my bias, we completed what Bitcoin hasn't done yet. So again, it goes to show you how strong, and look at that bounce on it. Does this mean that it won't go below here? I don't know. And I can't say yes. And I'm actually going to say, no, it's going to come down, because my analysis says in the past, we've come down much greater than Bitcoin. So I'm going to stick to that rule of that we're going to continue to come down. But you better believe that at these prices, I have Ethereum in my wallet and I have no problem buying it, where I'm a little bit more apprehensive buying Bitcoin at these prices, because again, I do prefer Ethereum and I believe that it's stronger. But in the event that it isn't, I'm well prepared to buy it. So let's do this, guys. Let's turn on the VRVP and let's see if we can find some confluence on just this run, the same way we did with Bitcoin. We're going to use the low to the high, and let's turn on the VRVP. Oh, indicators have to come on. There we go. Now, on the VRVP, we have a massive gap here. Just so you guys understand how we look, you guys heard the term gap, and the people who have been following me since 2017, they know they've been familiar with my gap theory, which is gaps between the candlesticks. They have gaps, and the price normally likes to gravitate. And actually, let me correct something. It's not my gap theory. It's one that I used a lot in 2017. I was actually introduced to that back in 2017 when I was learning about TA. So it's not my system. It's one that I adopted, and it worked out really well. And many people followed me and saw the accuracy. They have a 90% accuracy. Now we have another gap that came onto the scene with the CME futures, and you can see how well those gaps on the CME futures work out. Gaps in price action, whether it's crypto or the stock market, they are a real thing. They do get filled more often than not. Same thing with the volume profile indicator. When you see this gap, what this means here, so you can understand how to identify this. This was a parabolic move, whether up or down in the price action, and you can always follow that. If you were to take this gap and you do this, you take this in here and you go back, you will find an area where you had a parabolic move with no real support and resistance. Look at that. Look at this parabolic move with no established support and resistance. So when you see this, this tells me that if we break, and look, we haven't broke it yet. If we break this area, we're going to come crashing down very quickly in here because there was nothing established. And if you go back into the chart here, again, there wasn't not much. The volume profile is not going to change because we're introducing this data in here the same way we did with Bitcoin. But if we're doing the study just on this move from the lows of the COVID crash, here again, you see the gap inside of the volume profile. You see the way price action has stopped right here at the largest volume before hitting the gap. Back in June, present day, we haven't broken it. Now, it doesn't mean we're not going to break it. I do believe we're going to go lower. I do believe, and I'm praying that we go lower because I want to buy Ethereum as cheap as possible. But we just don't know how low it's going to go. Now, I've got a couple of things that I want to make sure that you guys know. This here, I believe we're going to break. If we do, great. I'm looking at $886,635. But look at the 94%, guys. Look at the way it lines up. This is the shit that I love. Look at the confluence with the point of control right at 94%. You can't look at this and ignore these and ignore how beautiful this shit lines up. It's amazing to see all of this confluence. And when you see this, guys, this should not cause you fear. The only reason you should have fear is because you're holding from the top. And guess what? I'm going to make it real easy for you guys. If you were new to crypto and you bought Ethereum here, and hearing people like myself tell you that we have a chance to go down here and it scares you, don't. If it does, then you don't understand the power of dollar cost average. If you bought one Ethereum for $4,800 and you buy one Ethereum at down here at say the point of control is $188, you have lowered significantly your purchase. As a matter of fact, let's do the math real quick, guys. Give me 1 second. We're going to do 4866 plus 188 equal that. And you're going to divide that by 2. Look at this, guys. You buy one Ethereum at 4866, one Ethereum at 188. You have 2 Ethereums. You have spent a total of 5,004 times 2, 5,054 for 2 Ethereum. Now you divide that by 2, and your average becomes $2,500, guys. From a $4,800 purchase, you lowered it to 25 to 25, 27. And look at this real quick. I don't want. We can do this all day.
That is definitely a very important thing to remember because
yes.
I think a lot of people concentrate on the fact that they're seeing their portfolio get smaller and shrink. And think they've lost money. You will lose if you sell at a loss. But if your strategy is to stay in it long term and you're buying as the price goes down and assuming it will turn, and it will turn, That's exactly where the beauty of dollar cost averaging happens.
Exactly. And now just one more example. You bought one Ethereum at 48.66, and now you just buy two at $188. $188, guys. If you can afford one Ethereum at $5,000, you can afford to buy two at $188. So if you bought two at 188 and then you bought one at 48.66, that's a total of 5,243. You divide that by 3, and your average drops all the way down to $1,747. That means that all you have to do at that point is get to $3,400, and you have a free position. Yeah. You've doubled your money. So that $4,800 buy, guys, becomes a free double at $3,494. And I mean, that's beautiful. That's amazing.
Absolutely.
That's amazing.
Love this. Guys, if you have questions, shoot. Because I think we're going to have to look at XRP.
Oh, absolutely. So before I leave this chart, guys, does anyone have any any questions, anything that was unclear? I know sometimes I talk really fast. I'm trying to squeeze as much information as possible. So I want to make sure that I get
Just give it a second, because I know there is a delay.
That out there to you guys. But if you have online. Okay, all right. You know what I did not do? I did not look for confluence besides the POC level at that 94%. So 94%, guys. I'm gonna snap a line. I'm gonna do this real quick, and because this is something else that I do like to do in my analysis. Let me put away the volume profile, and if we're gonna go with 94% of a retrace, and that gives a nice confluence with the POC level, can we find confluence with price action? I just snapped a gold line, and look at that, guys. Look at that. I swear to God, me and Marta did not rehearse this. We did not rehearse this. And look at this. Look at how perfect.
This is the beauty of this.
It's like we live in the Matrix.
I know people that are totally against technical analysis, and they will argue they're
retarded.
But when you see things like this, you just have to. I get it. Because the point they're making is, I'm going to put you in a room. Actually, there's this guy and the Polish folks. If you're watching this, you know who I'm talking about. He was trying to put like the biggest technical analysis in the world. He was saying, I'm going to put you all in a room. I'm going to give you a chart. You don't know what chart it is, and I want you to tell me what's going to happen next. Now, I think he was just basically, going for an extreme. Obviously, when we're looking at an asset, only candles and price action is not the only thing we look at. Obviously, we take market conditions into consideration. We take previous cycles into consideration. We take point of controls and EMAs and whatever works for us, whatever way we figured it out. But when you see how it works, you cannot say that TA is useless. It's the beauty of it. It's the magic. It's the reason why I'm doing this.
Look, I can explain it really easy for you guys to understand. When you look at candles and you look at price action, you ask, what is this? What does all this mean? And it's really simple, guys. These candles represent one thing and one thing only. They represent human emotion. That's all it is. And when you guys all have heard of the term, the 1%, right? The 1% being the richest people in the world, and the rest of us are in the other category. Now, you've also heard of the herd mentality. Humans, as it's just our nature, we work. But we are together as humanity, and we have one type of mentality. Most of us have one type of mentality, and we are very easily swayed from one way to another. These charts measure that. When we're very excited, what do? We buy. When we're very fearful, what do? We sell. When we get euphoric, what do? We buy. This is a measurement of the collectiveness of everyone in the market when they're happy and when they're sad. And that's exactly what this is. And when you integrate these tools like the Fibonacci and harmonic patterns, you're basically taking things that they use out in nature. And again, please Google in your own time harmonic patterns and the effect on humankind. Just put that in there and you'll be fascinated of all the stuff that you'll hear about what exactly is the Fibonacci sequence. Fibonacci isn't about trading. It's much more than that, but you'll be able to find that on your own. So when you look at the study of human emotion, that's basically what this is, guys. And when you said about that guy putting you in a room and trying to tell you for you to predict it, it becomes easier to do that in a macro view, because again, we're all fearful at the same time. Most of us are all joyful at the same time. We have the same triggers, very similar to everyone else, other than the 1%. So we fall into this category, guys. As much as we want to think that we're better, we're not. We all get excited. We all get fearful. It's just a matter of how you control it inside of trading that matters, because we all go on a roller coaster. We're all going up that little click, 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 click. Nobody can say they're not a little bit afraid or a lot of afraid. Oh, and we'll go through the same type of emotion. When we go over that cliff, what do? We all feel that different feeling in our stomach. We all yell. We all get excited. The adrenaline's pumping. That's exactly what the charts tell you. This is telling you where that fear is, where that greed is, and this is opportunity. When you're able to identify these are areas of opportunity, and these are areas of opportunity to make money as far as selling, and these are areas to make opportunity as far as buying, so that you can sell into all of this all of this excitement. So that's just another way of looking at how technical analysis work, if you don't think that it's a very accurate tool to make decisions. I think it is, and it's worked out really well. I mean, you can back test this stuff, guys, and you'll see that it continues to repeat itself.
And I mean, even with the obviously right now where we put in so much technical analysis into Bitcoin, and we saw basically what your fibs and what your technical analysis that you've showed us, the confluences and how it worked. We can look at it right now after everything that went on, and we can see the emotions. And we can also see right now, we can nearly see into the future that those emotions are not, it's not over in terms of fear. And it's just that magic, that amazing, beauty. It's just incredible to see how it's reflecting the charts and how it's reflecting, the numbers we've just put on the charts. We know that everything that just happened with FTX and all the other FUD that we're hearing about other exchanges, that most likely is going to have a snowball effect. Why? Because people are going to panic, because people are going to be fearful, because they're going to think that their money
contagion. That's what contagion is.
And the fascinating thing about it is that we know we're assuming certain things based on previous cycles. Whether, like you said, whether the 886 is going to be the bottom, we don't know. But it's a good point. It's a good risk tool to assume this could be my good level to start buying. And when it turns, your risk to reward ratio is going to be significantly amazing. But what I'm just trying to say is just how fascinating emotions and what we feel, our feelings, and how the cycle is shaping up, how it matches those magic numbers. Do you know what I mean? It's just, obviously, this is not a given. My point, what I'm trying to make here is it's not set in stone, but it's amazing that we can put all that information together and use this to calm us down, to give us that sort of, okay, that's my plan. I'm going to stick with it. And there's no need to panic. There's no need to, freak out. And when this happens, you are you've your ducks in a row, and then whatever happens after that, it's obviously you can't tell for sure. But we've made decisions based on facts, on history, on data, and you cannot then fault yourself. You cannot then be emotional about your decisions. Whereas if you were to base your buys on crazy candles and everybody else aping on it, or everybody else selling, you have matured as a trader when you've done these things. You've matured as a person, and first of all, as a trader, when you're doing these things. And there's obviously, look, there's a lot more to it, but I think you have to say to yourself, well done, when you have come to this point where you're looking at lower prices or whatever is as to come, without panic and without that fear.
Absolutely. Guys, Marta, do you remember when we started this chart about 2 weeks ago or 3 weeks ago, right?
I'd say it was two. Okay. It could have been even nearly a month ago, yeah.
Okay. Before I go, actually it was closer to a month ago. Before I go into this chart, I just want to say something. There's a lot of people out on Twitter that will give you analysis, and they will change their analysis, and they will delete tweets, and they'll always position themselves to look like heroes. Most of you that know me, that follow me, know that I like to call people out. I'm old. I'm coming from a different generation. I fight with people all the time. Maybe it's my heritage. That's how we are. But I'm always fucking in an argument with somebody. But I think the most important thing is that people know where I'm coming from. People know that I'm not full of shit, and that I know what I'm talking about. So, and the reason I'm saying this is I want you guys to go back to not the last one, but for about a month ago when we started this XRP analysis, and I want you to then fact check me and see if I moved any of these lines. And the reason I'm saying this, because when we had this chart, we were here, guys. This was almost a month ago.
Yes.
These lines, and I even wrote commentary so that we can follow along.
I snapped this line. So you can go
when we were here.
We were thinking,
we were here. Now, this is my comment. If BTC sweeps lows, I believe this support will be hit. Look at this shit, guys. And for those people that say that TA doesn't work, this is before the FTX scandal. This is before all that stuff happened. And look at where we hit. I mean, you can't see this and say that TA doesn't work. To the fucking dollar. Look at this tweezer bottom here, guys. Even the second week, we found support on that same line that me and Marta talked about almost a month ago. And as a matter of fact, we were here. Look, because that's what we did a projection. We did a projection that if we go to the bottom, it's going to be 42%. So we were right here. Let me snap a line to show you. And I want everyone to fact check me to see if I was full of shit or not. We were here and we were holding this. And we were talking about, well, we don't know if we're going to go up, we're going to go down.
Because it was shaping up to be possible double bottom W formation where we could have obviously shoot back up.
That we can go up, but I've been on the bias the entire year that we're going to go down, So my analysis, you can see there's no notes to the top. I didn't make an analysis for the top. I made an analysis for the bottom because I truly believe that we will have a better probability of going down than going up. And the proof is in the pudding, as I say in my generation. I don't know if the younger generation's ever heard that saying. But here it is, guys. Now, this here, I put if BTC hits $15,000 to $14,000 zone, we should be here. We hit the high 15, low 16,000. So we still had a little bit more to go. But like I said, I still think we have more to fall.
It swept the lows.
Right there. It swept the lows. That's exactly what this comment said. If it swept the lows, we will hit here. That's exactly what we did. We came and landed on this line here. Now, when we do go further down, this is going to be the next level of support. Again, guys, if you're an XRP holder, it's okay. Look, we're giving you levels where you should be buying instead of worrying about it going lower. This is helping you make more money because I just showed you an example. The more you buy down here, the lower you drop your cost up here, and you will double your money much quicker. And that's what you guys need to understand why this is so important and why you should never fear a market that drops. You should have excitement when you see a market drop. Absolutely. But isn't this cool? Isn't this cool, Marta? Look at that.
Amazing. Love it. I was so excited to see it because I think when you were explaining it, it was how the altcoins correlate to Bitcoin drop, and I think you were explaining that
3-to-1.
3-to-1, exactly. If you want to go over this maybe quickly for everybody, because
sure. Yeah. So basically, what something that I backtest, it's not my theory, but it's something that I backtest, is that when a Bitcoin drops 1% in a bear market, alts generally drop 30% for every, 3% for every 1%, which is the 3-to-1 ratio on altcoins. As an average, some are stronger, some are weaker, some drop more, but an average is 3-to-1. So that's where I came up with this 42%, measuring what the drop from here relative to when we did this chart. And if you back test me, you'll be able to listen to the actual analysis. And we measured everything out and everything worked. Didn't we do like 3 or 4 different altcoins? And we kind of measured that distance. Yeah, but XRP was the one with the most requests. So that's why we're going back to this one here. And it was a 42% drop. If Bitcoin hits between 15 and 14,000, we should drop here, and if we sweep the lows, we drop here. And as you can see, it worked out, beautifully here, and it's going to work out this way on most alts.
We're pumping XRP now, bleeding crypto, because I'm getting alerts. I'm getting alerts that XRP is rising. It's up 4%.
Yeah, I know. Nothing is going to go down in a straight line, guys. Always remember that. I think we talked about this in a previous session, but I'll go over it real briefly, guys. The way markets work, guys, what moves markets, it's not you and me. It's not crypto Twitter, guys. In a bear market, nobody is buying XRP. Nobody is buying Bitcoin. And when I say nobody, the orders that you and I put in were nothing. We're peas. We're peasants. Yeah, we're peasants. The real money comes from the derivatives contracts. The institutions, those guys are the ones that are driving the market. So what they do is that they take us collectively, and if we think it's going to go up and we long, they drop it to take our money. If we think it's going to go down, they raise it to take our money. So that's why you will see movements like this out of the blue that happen complete opposite to the direction that it was originally falling, because everybody wants to be a genius and say, okay, it's falling, I'm going to 100x leverage and make up all my money. And the moment you put a leverage position like that, what happens, guys? Those heavy degens know exactly what happens. The price starts moving up. Why? Because you are trying to take the market maker's money. They are not going to allow it. And it only takes 0.46% to knock a 100x leverage. 0.46%. To give you some context, Ethereum, if you do on BingX, that's now starting to sponsor me, they have 150x leverage. If the price moves $6, $4, it knocks you out of $154. That's it. If it moves $6, it knocks you out of 100x leverage. If it moves $12, it knocks you out of a 50x leverage. And you guys see how volatile these assets are. So when you see a 1-2% move, you think, oh, that's not much. That just knocked out 150x's, 100x's, 50x's, anything from 50 to 100, it just knocked them out. And that's where the majority of the degen moves happen within those 50x, because everybody wants to be smart in the market, will think they're smart in the market, and put in those positions. And until that stops, guys, there is no hurry for the bull market to start. Because if you look at Glassnode's analytical posts that they put out there, we have an average of $300 million a day getting liquidated off the market. These guys are making a killing in this bear market. They're in no rush. And when we fall, guys, we're going to fall when this happens. Let me show you this real quick, guys, because this is something that's really important. And this is something that has happened many times before when we have big moves. Let me show you this. This is when we're going to start. This is when we're going to get our next capitulation. Let me show you. Look at this, guys. It's the weekly time frame. This week, on this particular week, Bitcoin as a whole, in an entire week, moved 0.12%, $7.81. This one, $16. This one, $64. Imagine that, guys. $64 an entire week. Then what happened? Then we had our 50% drop. The market makers were not making any money. People got exhausted. They thought Bitcoin was dead. They gave up. And then the volatility came in. And then what happens again? People start thinking down here, they're going to start shorting. And then all of a sudden, we start moving back up again. So that's how markets work, guys. Markets don't get moved by us. They get moved by derivatives contracts. That's where the money is at. And until we stop degenning and using those max leverages, the market is in no hurry to go anywhere anytime soon.
Just think about the money that was lost in the FTX scandal. And maybe then you'll get the picture of how much money there is in the market and what actually moves it, because even if you're in crypto Twitter and if you see those big massive accounts that they talk about how much money they have, and they claim to to have hundreds and thousands of dollars. First of all, those people are not putting in hundreds of thousands of dollars in one go into an altcoin or Bitcoin or whatever, just in one order. But it would be possible for them to move a smaller coin, I suppose, that has a small market cap. But when it comes to big, massive moves like this, it's not those people. It's not us. It's not even collectively, crypto Twitter. It's whales, institutions. It's crazy money. And like that, a house always wins. You have to remember
every time. Every time.
It's that's the way the game is designed. It's great when you make money. That's why I keep saying this to everybody. Don't be greedy and pay yourself. If you see money, don't let it just melt away. Don't let the greed take over. 25%, 30%, or like anything between 20%, 30%. It's money. It's a gain. I think in a kind of a smaller, if you think about your gains going to 5-10%. Fair enough, it's not really, I wouldn't cry too much over if that goes away. But when you see 20 and above, don't hesitate. And especially right now, like you were saying, Bleeding Crypto, you're expecting a rally. I think we might have a little bounce.
Well, not so much a rally, but more of a liquidation. And based on this, let me show you the data that I use to help me on a day-to-day, and this is what I do with my team. So I'm going to do a little shameless plug, if you don't mind, Marta.
Away.
I have.
Oh yes, you were talking about the high block last time.
Yeah,
because I bought a few alts as well, and I just think they're going to move. But that's like that. I do feel we're going to get a bounce. And when we do see that, if we get that liquidation grab, I'm taking my money off the market.
Yeah, I think we got a good chance of moving up, and I don't think it's going to be much. Today, I started a room in my Discord, a live trading room. So basically what it is that the people who signed up to BingX using my referral code, they show me proof of that. They get access to a room where I do live trading. And this is one of the softwares. And today we had a couple of trades just based on this data. And people were amazed. My target was the liquidation, and it hit within $2. Our entry was $12.96. And the based on this data, and it went up to $12.98. We caught the perfect entry. We came down, we shorted it, we made money, and I share that live with all my members, my entries and my exits and all that stuff. And it's this software here. I can't really take credit for this because this is the type of information that I think is really vital for people to understand how the markets work. Right now, the last liquidation right now, according to High Block Capital, is at $17,003. $28 million will get liquidated, a 25x position at this level here. There's other ones here, but the highest one is the only one I care about. So where is the max? And this is how I caught a beautiful short today. I looked at the last liquidation level on Ethereum, and that was exactly where I put my order. And it literally went above it by $2, grabbed our order. We all made money on the way down. It was beautiful. So right now, $17,003. Where are we? We are at 16,000. So when I say rally, let me, I don't mean rally like what most people think a rally is going to be. All I'm looking for is just a move to those specific areas. Now, I did before this whole thing with FTX happened, I did believe we're going to go through a midterm rally, similar to what the stock market is going, and it's something that I have to give credit again. What credit is due. Income Sharks has been talking about this for months about a midterm rally, and you can see it. It was a real thing, and I really truly believe that we would be in the middle of that rally if it wasn't what happened with FTX, unfortunate event. But right now, when I say rally, I'm just looking up to a move to 17,000 right here. This move back up here, which actually might have already happened. Oh no, this is a day chart. It might have already this wick here. Let me see when this happened. Give me 1 second. Let me look here. Yeah, this just happened recently. We just liquidated that position with this wick. We liquidated that position that we were watching on the High Block Capital. So that rally up to here already happened, which again, if that's why I stopped you earlier, me and my team are on an active short, and my team is actually watching this YouTube cast right now. Some of them are saying that they can't comment to your YouTube because they have to be members of yours for 3 hours.
I did put a limit because otherwise I didn't want obviously people coming in and commenting. You know yourself. We've had an issue.
So we've completed that move to the upside that I was looking for, and we went up by an extra $140 than I originally thought we were going to go. And again, this data isn't to tell you the exact penny. This just tells you where those orders are going to be liquidated, and it can go a little bit above, or it can go much higher as people start to pile in. But this type of data, and this is just one tool that I use to help us find confluence and ideas on where to pick up shorts, where to pick up longs, and it's been working out. Again, I'm not a genius. I just find whatever tools I can get. I welcome anyone's opinion on any tool that they find. If their grandmother, if their hip hurts every time Bitcoin is going to drop, tell me. I will put some money on it. I will back test it. If your grandma's hip is accurate, I am not above using it.
One note I want to make here as well for anyone who's watching and is trying to become a trader and trade actively using leverage. Please do correct me if I'm wrong, but losses are part of your trading journey, and losses are not something you should fear when you trade. I think a lot of people assume that getting into leverage positions, they either have to get liquidated or make a lot of money. And you see it all the time, which is a totally wrong approach when it comes to anybody starting with leverage. There is no, I know you probably use higher leverage than 5 or 10 or...
No, I don't actually.
Do you not?
I don't. No, I do not use leverage, and I don't use it specifically because I see the way the market reacts to the heavier leverage. So how I make up that difference is I use larger positions and I reduce my percentages. So rather than going for a 5, 7, 8% move, I will use 6 figures and go for that 0.8%. But I scalp that, and I'll do that 3, 4, 5 times a day, and I feel much safer. I feel comfortable. I measure moves in the minute chart, the 5-minute chart, which are much smaller. And since we have so much volatility in crypto, a 0.8%, 0.8% move, less than 1%, is very easy to accomplish. So if you understand technical analysis, it's the same thing on a 1 minute chart as it is in a 1 or 4 hour chart. The principles are exactly the same. The market structures are the same. RSI oversouls are the same. EMAs are the same. It just moves much quicker. And that's what my live trading channel is about, showing them. And we trade on the 5 minute time frame, and we just go for those small positions. I call it nickel and diamond, but at the end of the day, it's a good day. It's a good day.
What I just wanted to kind of make a point of, though, is that it really embrace the losses and embrace your like, you don't have to have every winning trade to call yourself a profitable trader. Exactly. And
but I truly believe that you need to have a lot of experience in the market before trying leverage trading. I don't think it's for everybody.
Yes.
It's not for everybody. And unfortunately, it's the other way around. People will come into crypto with leverage first. It's
like, oh, and they usually just go for crazy leverage first without, when you actually use this reason and you think, I could be way more profitable in a steadier way. Because think about it, 20% daily or on a weekly scale even. If you start adding that up, your portfolio gets nicer and bigger at a steadier pace. You're reducing the stress levels, and you can actually balance so many more things. But just because I've been really meaning to say this to you, and please shamelessly, because I'd say a lot of people that are watching us, what is your Discord? What are the terms of joining, and what do you do? And can people that are watching us, if they want to join, what do they have to do? Because obviously, I'm sure there's a lot of people that have seen what you do, and if you do this daily, if you help people trade, I'd say you've sold yourself to many people.
I appreciate that. I am on my Discord, and all my members can attest to it. I have 320 members. I'm on it 7 days a week, because I love what I do. And first, before I even give you my website, I want you to understand. He gets up at 4 o'clock
in the morning, guys.
I'm up at 4 o'clock. Yeah, me and Marta are talking at 4 in the morning.
Yeah.
We're like, what time we're going to go on the show? It's like 4:20 this morning. I'm up. I'm a workaholic, but I love what I do. So to me, it's not working. It's a passion. But I want everyone to understand that I'm not a signal group. I started a live trading channel today only because BenX is sponsoring me. They're paying me for my time to do that, and it's only for selected people who join it. But my Discord is about education. If you like the content that you see here today, that you've seen before in other videos, you like the way I explain it, you can relate to it, and you want to learn more, please join us. It's $125 a month. It's bleedingcrypto.com. But I'll be the first to tell you guys, you don't need to pay anyone to learn how to trade. You can easily go to YouTube and just type in there, Crypto Trading 101. And there are thousands of hours that you can learn on your own by yourself without having to pay anybody. So why pay me? I'll tell you the people who fit the profile that pay me. They've already gone through those courses, but they need that one-on-one. They need that interaction. They need to be able to ask questions and get a real-time response. They need to get to the next level. They learn the basics, but they just want to incorporate more tools that they quite don't understand, again, because there's nobody there to talk to in a recorded video. They can talk to me. I have also recorded videos in my Discord that you can listen to, but most importantly, there's a big community of like-minded individuals that are out there researching different NFTs, different products, stocks, everything related to investing. They're talking about it all day long from different parts of the world. So it's a 24-hour conversation to help you pick and choose what you can relate to, what you feel comfortable with. And at the end of the day, it's there for one reason, for you to make money. If you want to just chat in a way, you can do that. But the whole purpose is to make money, to pay for that, make sure that education was worth the money you spent. And I don't think that $125 for 7 days a week of my attention is a lot of money, in my opinion. So
no, and I will echo what you just said about not having to pay somebody to learn these things.
You don't.
I'm a living example of this as well. I have spent money on groups that they only ended up, I only ended up basically wasting that money when I decided that it's no more, it's just getting me nowhere, because they were basically signal groups, trading groups, without any educational content. I put my time, and my time only, into learning and making mistakes on my own terms without putting a real money. Eventually I got brave and I did, and I wasted a lot of money as well into trades, but it was a totally different experience, and at that level then I was able then to think, you know what, when I got into those groups, it was absolutely pointless. And like you said, you can learn basics and you can learn the things that will make you a good trader to a point where you can actually say, you know what, I feel I need a little bit more guidance. I need a little bit more one-on-one, or someone who can show me from their experience a little bit more, shed the light. But I am understanding, and you have to be there. You have to be at that point where you are understanding at least the basics. So I agree 100%. I'm going to remind, actually, if I forget this, and anybody watching us, guys, please remind me. I will add all the details from Bleeding Crypto into the description of this video afterwards.
Appreciate
Send you the links.
Appreciate it. Thank you.
You can join his Discord. You can if this is what you want to do. But I like, again, we're not trying to sell anything here. I just think, watching you, there could be a lot of people wondering how, and if it is something for you, just make sure you're not doing this just because you think, right, BC is going to teach me, he's going to be making me money, right, like that. You have to put in the time, and you have to. Absolutely. You have to. If there's any questions, any more comments, we're going to give you a couple of more minutes. If not, I think we're going to wrap it up, because we've been here for an hour and a half. This was extremely packed stream. We've had actually an amazing turnout. There aren't many comments for the minute. Somebody asked me when World War III.
What was that?
When World War III.
Oh.
That is a deep question. I don't know if you want to go there.
Did you say World War III?
Yeah. Someone's question was.
Look, honestly, I don't really pay too much attention to what goes on in the outside world, the politics, and with all the stuff going on. Here's why, guys. I have enough to worry about trying to figure out where this price action is going. This is not easy. Well, when I do my analysis and I put my fibs and I put my measuring, it may seem like it's something real easy. It's not. It's taking me years to get comfortable to use the tools. Now becomes the hard part. Now that I know how to use them, how can I make money off those tools? And if I start allowing other influences to cloud my judgment or cloud my emotions, I can't handle it. It's too much. I've got to worry about just the space alone. What's going on in this space? There's enough to keep me busy, keep my mind busy. So I really don't. I mean, I don't know what happens in my own neighborhood. Like if there's a crime, I just don't listen to the news at all. Any little bits and pieces that I get will be from Twitter. But even then, I just read the quick little headline, but I don't go into it.
Yeah.
I can't change anything. I'm not going to stop World War. My opinion is not going to matter. So it's not something that I really want to concern.
And I feel like even if we knew if it is happening now or it's going to happen, there isn't really anything we can do to change
we can't.
it.
We can't do anything.
And there is no point, because I think and you know me now at this point as well, Bleeding Crypto, and a lot of people that follow me as well, I really put a big emphasis on healthy mind and the balance and reducing the stress. What's the point of, and this is the reason why I actually also, whenever I did Bitcoin analysis, I would never go into like too far ahead in time and trying to predict on a very big time frames what's going to happen next. I never felt comfortable with it. I don't think there's any point. It's impossible. And I like to concentrate on here and now and what's around me, my family, my surroundings. Like you said, I don't even know what's going on with the neighbors. When you concentrate on like that, just price action that you need to just make money off, this is a completely different story. And on top of it as well, I took a lot of other responsibilities in terms of content creation and things like that. Staying, educated and helping as much as I can with information and everything. So I think, just stay within your own limits of that pressure of stress. And if you feel like it's too much, walk away. There's really no point, worrying about whether we're in World War III already, or are we going to see China nuke Taiwan? Actually, maybe Russia is going to nuke the rest of the world. If it happens, it happens. So really, there's just no, in my opinion.
And it's not that I don't care.
Yeah,
it's just that I can't do anything about it.
Exactly.
I can't. So what am I going to worry about it? Look, I'm already losing most of my head. I start worrying about World War III. I'm going to lose the rest of it. I'm trying to hold on to this shit.
Obviously, we can debate things and all that, but that's not what, this stream as well. I think it feels like we're trying to help educate you guys and help you, see trading from the kitchen side and give you that passion. And this is what we said the last time when we were live, that you and me were so passionate, like we were talking about the fibs and the lines, how it touches. When you feel that fire, when you feel that passion, this is when you know that it's for me and I want to pursue this.
Yeah.
This is why
we don't want you to learn TA. We want you to love TA.
Yes.
It's a very big difference, because when you love what you do, it becomes much easier, and it's not a job, guys. It's like a hobby. It's like you're literally doing think about this in your life, whatever you like into, maybe it's soccer or football, whatever it is that you like to do on your off time. Imagine if you can make money doing that, what you love to do. That's how I feel. This is my hobby. This is my pastime. And me and Marta are fortunate enough to make a living doing what we love to do. And it's a great feeling. And we're trying to pass that along to you guys. That's why we're here. None of you guys, we didn't charge for this. We're here because we want you to experience the joy that we get out of doing this and teaching you guys and seeing you guys grow. I'm sure you get the same type of DMs I get, Marta. People saying how, oh my God, crypto, I helped them in their journey to crypto and I changed their life. It's a great feeling. Absolutely. It is a very, very good feeling when you get those DMs that we had a hand in changing someone's life. It's very humbling. Very humbling.
Yeah, absolutely. And that's really the reason why I do this. It's the people. I love helping. It's not really like, I know it sounds like a cliche, but guys, it's something that I feel very, it's fulfilling. It's like, you kind of nearly feel like you found a purpose in life. Obviously, you have a family, you want to raise your children, you have children, you have grandchildren. But when you kind of think about communities and people that you've met through crypto, and you can share your knowledge and your passion and like that, inspire them to do something else. It's an amazing feeling. There was another point I just wanted to make there, and it kind of skipped my mind, but I feel like anybody is you're so lucky, and thank you very much, because like Bleeding Crypto was saying, you pay for his time when you join his Discord, and it's just wholeheartedly, I really agree, because that experience that you have it's like a teacher. You go to school, the teachers get paid, and you can change your life, and you can you impact someone's life and all that. So you're very fortunate to have him here with me, and I'm so grateful that we're doing this every now and again, and you get that portion of his knowledge and you can learn from, because I can tell you guys, if you stick with us, if you stick to those lives and what we show you here, I feel in no time you're going to be able to move to the next level and take the next step with your trading.
And we'll be watching you guys on your channels, and
Yes.
we'll be the guest on your channels, and you'll tell us how you started listening to us. You became an analyst, and now you have your own show. We love that. We love that. I tell people all the time, we're not in a competition. We're in a collaboration. We want to help each other. We shouldn't be in a competition or worrying about who was right, who was wrong. No, if something's not right, hey, give me the heads up. Did I do something wrong? Yeah, show me how to do it right. Help me to make money. That's all I care about. I don't care if you correct me. I don't care if you tell me I'm wrong. If I'm wrong, okay, show me what I did wrong so I can fix it. That's it. It's not that big of a deal. Nowadays, when you try to tell somebody, hey, look, I think you made a mistake. Oh, no, shut up. You don't know what you're talking about. I'm like, oh, shit. It's like, relax. It's, I'm trying to help you. And sometimes people just don't see it that way. I think it's a competition.
Guys, on that note, thank you very much to everybody that tuned in. Thanks very much for great comments. Everybody that's been very active. I will talk to Bleeding Crypto after. We're going to try and set up another time. I have a few things happening this week and next week, but hopefully we'll find a day again that will suit us. I know we're kind of going into the busy time of Christmas and you were saying Thanksgivings. So hopefully we'll find, and like that, maybe we'll just, we usually do our streams on Fridays. Today is Monday. We might find another time. Who knows what else is going to happen with the market. But I'm super excited for the next stream, and we'll let you know as soon as we know when the next time. Hopefully, like, we can keep them regular enough and keep you updated on everything that's happening as often as possible. So on that note, thanks very much again, and we'll see you on the next stream.
Bye, guys.